Another week, another opportunity. Hi everyone, welcome to Intelligent Investing. I'm April Tan, Chief Equity Strategist of COL Financial. After 5 straight weeks of gains, the Philippine market finally gave in to profit-taking and global headwinds didn't help. Who are the leaders and who are the losers? Let's dive right in. So what happened in the market last week? The PSEi dropped 0.8% week on week, closing at 6,413.10, snapping its 5-week winning streak. The Nasdaq dropped 2.1% and the S&P 500 also fell by 2.2%. The 30-year U.S. Treasury yield surged to a 19th-month high of 5.09% following the passage of a tax and spending bill in the U.S. House of Representatives. Trump calls this the One Big Beautiful Bill Act. The new bill is expected to increase average annual U.S. deficit to GDP ratio to approximately 6.8% to 7.4% over 2025 to 2034. This is a significant increase from the CBO baseline of 5.3%. This in turn will push the U.S. debt to GDP ratio from 120% in 2025 to approximately 147 to 152% by 2034. Ironically, the bill was passed despite Moody's downgrade of U.S. credit ratings earlier this May due to concerns about the federal government's debt and deficit level. So this is why bond rates went up and the stock market went down. Now let's talk about the top losers for the week. CBC fell sharply after being one of the best performing stocks in the PSEi this year. Remember that CBC was added to the PSEi Index in February, so for this year it was up by more than 40% before it corrected. URC fell by 7.6%. The stock gave up some of its gains after rallying by more than 39% from the low in April after disclosing better than expected first quarter earnings. The next 3 stocks are SM Prime down 5%, Monde down 4.7%, and Globe down by 3.9%. SM Prime fell due to concerns about the residential condominium oversupply. So during the first quarter earnings season, we saw property companies disclosing weaker residential take-up sales. For Monde, during the first quarter earnings season, it disclosed weaker than expected profits and noodle sales that went down due to lower volume and lower selling price. Globe's first quarter profits were also weak as it suffered from the weak performance of its mobile phone business. Now let's move on to our gainers. So our biggest gainer was JGS. It's up by 10%. And this stock, well, it's up mostly because it's a cheap stock. And the company is planning to wind down its money-losing petrochemical business. Converge, on the other hand, was up by 4.6%. The company disclosed strong profits that increased by 18.3% due to strong demand for its fiber broadband business. The next 3 top gainers are AGI, up 4.5%, BDO, up 2.9%, and BPI, up also by 2.9%. Now looking at the rest of the world, after earlier news of the 90-day tariff pause, President Trump reignited trade tensions as he announced a 25% tariff on smartphones made outside of the US and threatened to impose a 50% tariff on European goods as well, all starting on June 1. Markets responded negatively to this, with the Nasdaq and the S&P 500 falling by 1% and 0.7% on Friday, the day that the news was announced. We're nearing the end of the first quarter earnings season and results have been weak so far. Out of the around 50 companies that have released their earnings so far, only 11 beat expectations and 16 have missed. Median earnings growth was just 6.4%, with banks growing by a modest 8%. Power and telcos underperformed, while properties grew by 7%, but they were overshadowed by oversupply concerns. To know more about what happened in these industries, read the full report found on the COL website. Log on to your COL account, go to the Research tab, and select Weekly Notes to read more. Another interesting news is that Philippine automotive sales dropped by 10% in April, the biggest annual decline since the 11.2% drop in January of 2022. This was largely driven by the 35.5% decline in passenger car sales as commercial vehicle sales were flat, decreasing by only 0.6% year-on-year. For the year-to-date period, total vehicle sales increased by 2.5%. It might be too soon to view the 10% drop as a sign of weakness for the industry. First of all, we have the timing of the Holy Week. Remember, in 2024, the Holy Week happened in March, whereas the Holy Week happened in April of 2025. So we could be having a high base, low base effect in terms of sales. The next one is that BYD is not part of CAMPI, which collects the data. And there are indications that BYD is gaining momentum, with sales during the first 3 quarters, together with other cars that are held by AC Mobility, increasing by 114%. So although passenger car sales might be weak during April, it might also be an indication that EVs that are being sold by companies like BYD are gaining momentum and grabbing market share from traditional players. In today's Stock Spotlight, we're talking about one of the most exciting REIT growth stories in the local market right now, RCR or RL Commercial REIT. A REIT or Real Estate Investment Trust is a company that owns and operates income-generating real estate properties. This allows investors to participate in real estate and earn income from owning them without having to buy the properties directly. RCR is making big moves as CFO. Kerwin Tan shared that the company plans to make the company as big as possible, and this could mean its market capitalization tripling to 300 billion pesos in the next 3 years. It may seem a bold move, but it seems possible as well, given that Robinsons Land currently owns 200 billion pesos worth of rental properties that it still has not yet injected into RCR. So last April, RLC offered over 1 billion RCR shares to the public, boosting RCR's public float, or the portion of shares available to the public, to 42.57%. That's way above the minimum, which is 33.33%. The bigger the public float, the more liquid it is, making it easier to buy or sell the stock without big price swings. Another reason why this is important is because a company needs to maintain that 1/3 public float in order to stay as a REIT. So now that its public float is bigger, RLC can inject the new assets into RCR. This will also enable the company to acquire up to 28.5 billion pesos worth of new assets without hitting regulatory barriers. Another interesting thing is what assets will be injected, because right now, if we look at the portfolio of RCR, they're mostly office properties. And we know right now there's an oversupply of office properties. And this means that it will be difficult to command higher rental rates. So as far as the injections are concerned, we think that a lot of them will be malls this time around. The outlook for malls is actually more attractive. The rental rates of malls are still enjoying escalations because of robust consumer spending. So if the share of malls in RCR's total asset base is higher, it will be better for the REIT. So maybe the assets won't triple right away, but at least we're quite sure about the 28.5 billion. Will we possibly see RCR be part of the PSEi Index in the future? I guess we'll have to wait to find out. But then again, I think it's a good possibility given the significant increase in market capitalization that could happen with the asset injections. Before we wrap up our episode, here are things to watch out for this coming week. Continued volatility from Trump's tariff threats, but then again, Trump said he would delay the EU tariff to July 9. Next, we have a lot of US economic data coming out this week, such as PCE inflation, GDP second estimate, and consumer confidence. And finally, any signals from the BSP on policy easing ahead of its June 19 meeting. That's all for this week. If you found this market rundown helpful, don't forget to subscribe for more market insights every week. A new week is a new opportunity. Remember to stay sharp, stay selective, and as always, invest intelligently.